We will be starting with recording of transactions. Plus one book. Okay, so we plan to solve the illustrations from the CBSE plus one book. Not only the illustration exercise also. Before that, before you go for learning the accountancy in detail, let me explain what is the background of this. What is the background of this? And what is the structure? So you have to understand those structure first of all. Let me explain you the concept called accounting cycle. Accounting cycle. Okay. See, the accounting cycle is nothing but the mode of preparation of whatever the transaction happens in a business to locate or to identify whether the business is really growing or not. Is there any profit or loss? These things will be calculated. That calculations will be systematically done by preparing the accounting cycle. This will be rotating year after year. Okay, year after year. The starting point of the accounting cycle is nothing but cash business transaction. Cash business transaction. Okay. This is the starting point. Whatever it may be, if it is related to the business, if I want to record that in a systematic manner, then it should be a cash business transaction. So before you go further to record whatever it may be related to the business in your accounts, knowing this cash business transaction is the predominant one. The transaction is nothing but the action between the two parties. Transaction is nothing but action between the two parties. I educate you or I teach you and you are learning. And I am teaching you, you are giving me the fees. So the action involves two-way communication, like I give and I will take. I educate and I get the fee. I sell the goods and I get the money. I purchase the goods, pay the money. So whatever the actions may be involving of two activities, two actions or two items. Those two items would be called as an account, right? So transaction is nothing but just an action between the two parties. Transaction. Okay. Action only. Give and take. A and B. Something goes from A to B and in return A gets something from B. Clear? This is called transaction. And when it comes for the business transaction, what does it mean? I teach you and get the fee. Similarly, I may teach my daughter also sometime. Will I get any fee there? Absolutely not. So I don't have the intention to make any profit out of guiding my daughter, right? It's by default love and affection, I have to guide it. It's my bound duty also. That will be called as the non-business transaction, because whatever the action I'll do, not with the intention of making money or benefit out of it, then it's called non-business or simply personal transaction. If I start a business, probably a stationery mart where I'm purchasing the stationery and selling the stationery, purchasing the stationery for rupees 1 lakh and selling it for 1.5 lakhs, then I have the intention of making the money out of it. So 1 lakh is the purchase price and 1.5 lakhs is the sale price. The difference between these two is my revenue, right? So definitely it's a business transaction. If I'm giving my purchased material to my daughter for her requirement, of course I don't have any retaliation for that, will be called as personal transaction. Never mind about the personal transaction, only if it is being the business transaction will be recorded in your accounts. Personal transaction is not going to be considered. And it should be measurable in terms of cash. Monetary measurability should be there. If it is not so, we will not record. The appreciation as well as giving some right word on employee will be a healthy relationship, no, in the organization. So he will be performing better to the organization. Appreciating, promoting, and scolding, a fight between two employees, all these things again will have the impact in the business transactions. But we cannot quantify the result of it. Because of the fight between these two, what is the ultimate loss in production? I am not able to quantify. I am not able to measure that in terms of rupee, will not be recorded. And promotion. Promoting an employee without any salary hike, only a posting is there. cannot be recorded, right? But if there is a salary hike, it will have the impact only on the salary payment, not the term promotion. I am not going to record that as a promotion in our accounts. And when I purchase a land and building, okay, for that I am making the payment, it should be recorded for the business purpose, means it should be recorded. I purchase the land and building for rupees, say 1 crore. That 1 crore rupees will be recorded as a payment and as it comes into us, right? But I am not really owner for that. When I become owner for the land and building, it's not only the payment. Sometimes I have to get registered that house property in my name. Unless registration is confirmed that property is not mine, the later period in the legal shoot, I may lose my ownership also. The ownership is ensured only because of the legal deed. So if I don't have the deed, then that's a problem. If you have the two-wheeler driving on the road and police may catch you, the next one will be, where is your RC? RC means you have proof that you are the owner of the bike. It's not stolen bike. Registration certificate. RC, registration certificate. The bike is registered in your name or in your relative's name. On his approval, you are driving that. So if the bike is in your name, you are free to drive. If the bike is in your parents' name or some relatives or friends' name, usually law says that you need to get a permission from them. That permission letter you have to show. But practically we are not sure. We are not showing. So the registration certificate only ensures that you are the owner. Sir, I only paid the money, sir. He has handed over that property to me, sir. No. You are being the owner only when the registration is over. Legally. But registration involves no monetary value. So we will not consider that to be recorded in our accounts. Hopes you could now understand. Only the cash related to the business transactions could be recorded. The first, writing down the things, whatever the things happening there. So if you are planning to go for some vacation as a team of around 10 students, right? If you plan to go for a vacation as a team of 10, what will you do? You will estimate the planning, means expenses for the tour, and roughly it may be around 1,000 rupees if you estimate per head. You collect that 1,000 rupees from all the 10. Then what do you do then? You start maintaining all the expenses, how much you spend and how much you lose money and all. You will be noting it down. Finally, if there is any deviation, you will either collect or repay to the persons coming to the tour, isn't it? It's in a simple sense, writing down in our note. But the writing down in a note for a small tour, spending around a matter of 10,000 rupees is not a big deal. But when it comes for the crores and crore rupees, losing or even 1 lakh or 1 crore will be a big loss. So we have to be double cautious. In a systematic manner, we have to record. So the systematic of recording this cash business transaction is named as journal entry. This is named as journal entry. Is that okay? So journal entry is nothing but entering the cash business transaction systematically to find out what is the profit or loss for the business because of the 1 year's operation. Is that clear? Journal entry. Simply journal entry. Journal entry will be recorded date-wise. It will be recorded date-wise. Okay. If I spend some 100 rupees for auto fuel today, I spend money for the top-up and all, and for tea expenses, I will just start writing everything today itself. It will happen recurring nature, day after day. I just start recording in my accounts note day after day when the things are happening. Okay. But a year later, I want to know how much I spent for the tea alone, how much I spent for auto charges alone, how much I spent for advertisement separately. How do I calculate? I have to group all the tea expenses I have written over the year's period. For example, if I am paying rent, I have to pay the rent month after month. Every month, if I am paying 10,000 rupees, I might have been paying and writing that as a journal entry month after month. By the year end, I had to find out how much rent is paid. How do I then find out that? Group that rental payment alone, that grouping for the rental, grouping for purchases, grouping for whatever the other payment or receipts are there, will be called as ledger preparation. Will be called as ledger preparation. Is that okay? Now, overall, how much of the payments, how much of the receipts, how much of the assets you possess by the year end, can you represent that, or can you show me as a document or summary? Yeah, of course, we can do that as a summary. It's a summary of various balances in the ledger. That summary will be named as trial balance. trial balance. Hope so you could understand. Now later after this, we will prepare the final accounts. Final accounts will be usually prepared once in a year. See, this entire component, the trial balance and final accounts will be usually prepared once in every year. Currently we are preparing once in 3 months. As the computerized accounting is there, no. Once you record the journal entry, automatically the final accounts is by default will be prepared. So you are not going to prepare that. So your preparation ends with journal entry only in the practical life. In the practical life, the rest of things will be taken by the computer anyhow for the understanding and learning sake. When we don't have the computerized accounting, we have to understand the preparation of the ledger, trial balance as well as final accounts. Final accounts is usually prepared yearly once to find out how much the asset, how much the business is owning and owing, and what is the result of it. Okay, what is the result of it? The two aspects are going to be calculated here. Result of this 1 year's operations, and then what the business owns and what the business owes, right? The results is nothing but add up all the revenue, add up all the expenses, compare the income and expenses. The difference will be either your profit and loss. So that is called result. We usually prepare this in the name of trading and profit and loss account. Okay. So trading and profit and loss account is nothing but only the result. I want to know. See, I have studied plus 2 and 10th, whatever it may be. Okay. Now my requirement is, what is your result in 10th? Is it distinction or 80% or first class? I need to know. You might have written lots of examinations in between 8th standard, 7th standard, but we never mind those things, and class tests we of course never mind those things. The 10 years of your preparation by writing n number of class tests and final tests will not be required if you are showing the 10th mark sheet. That's enough, right? So the 10th mark sheet is the only spoken word here for your study up to 10th standard, right? The same way, the trading and P&L account gives you ultimately, sir, this is our net profit, NP, net profit. So much of transactions happen. Transactions are involving various expenses, various income. The difference between these two will be called as this one. This is the difference I have. It's nothing but a result named as either net profit or loss. Okay. 1 year later, what the business has, what the business owe, what the business own and owe. Okay, after 10 years of your study, okay, you don't maintain any of your books. Everything could have been thrown. Immediately after the next examination, you throw the book. Usually I do so. After the accountancy examination, I just throw the accountancy examination. Why? One is tension relieved. Another one is, okay, I'm 100% sure I will be passing that examination. I don't need to touch that again. Okay, this is the case we have. But up to 10th standard, you might have studied n number of books, all the books were thrown off. You could have maintained so many rough note and fair note, whatever may be thrown off. You might have written so many testers will have n number of marks thrown off. Only the 10th mark sheet you own, which is the asset, will be in the locker. Up to that, everything is in the dustbin. Only the 10th mark sheet in the locker. Yes or no? That 10th mark sheet will be called what the business own and owe, which is called balance sheet. So balance sheet is nothing but it consisted of asset. Asset is owning and owing. The business is liable to somebody else, liable to the owner. Liable to the owner is always named as capital. If XYZ is an entity, okay, XYZ is an entity, clear? This entity requires some fund. X being the main person or owner of this business, and he could have contributed around 10,000 rupees. And the running of the business is not possible with only 10,000 rupees, needs other support also. Some third party also given around another 15,000. The third party will be called as liability. Owner fund will be named as capital. When I use the word capital, it represents the person only. It represents the person only. Which person? Owner. That's why we sometimes call that capital being the representative personal account also. So the capital represents the owner's fund, and 15,000 represents the third party or outsiders funds, or maybe a liability. So these are the liabilities the firm has are woes. This is woving. And because of this amount, what the XYZ did it. Okay. They have now cash and other assets. This will be worth rupees 25,000. Okay. So XYZ will say, sir, we have so much of assets meant for owners as well as outsiders. Owner and outsider. Is that okay? This is owing. This is owning. Owning. Owning will be falling under assets. Owing will be either it may be liabilities or capital. So the business, what they owe and own by the year end will be named as asset is equal to liabilities plus capital, will be the starting point for the next year. That will become as a opening journal entry for the next year. See, in the very first year, the business is crash, zero. To start any business, we need to contribute some money. The amount contributed will be the capital in the very first year, right? But we won't invest year after year. Only in the very first year, we'll invest. In the second year, of course, whatever the asset and liabilities exist in that business will be the starting point. That will be identified by the preparation of the balance sheet. From the balance sheet, we will continue the next year. Each and every year, what we do is very simple. We'll simply erase all these things. Only the net profit will be the starting point. So up to 10th standard, so many mark sheets are there. All the mark sheets are thrown off. Only the 10th mark sheet is in the locker. Similarly, n number of purchases, sales and auto expenses, carriage expenses, advertisement expenses might have been incurred. All the documents were simply thrown off. Only the ultimate results is taken to the balance sheet. So otherwise, in the bogie celebration, like you might have seen, right? So lots of unwanted things will be means fired up. Similarly here, all these things are fired up. Even for the taxation purpose, we need to maintain only for the 8 years. More than that, it's not required. Similarly here also, what happens now? This will be thrown off and it's chiseled out. Only the condensed form of financial report we have. That is more than enough to identify the performance of the company. Your 10th standard and 12th standard mark sheet is more than enough to determine your education status rather than earlier studies. Same way, that balance sheet is more than enough to determine the financial status of the business. This is a starting point. So every year this process will be carried over. The next year again, cash business transaction will be recorded as a journal entry, and year end it's grouped as a ledger and made a summary named as trial balance from the ledger. And trial balance is the base to determine the company's results as well as company's financial statement. Results is nothing but trading and P&L account. So this is nothing but preparation of the trading and profit and loss account to determine the net profit. And when it comes to the balance sheet, it's nothing but what they own and owe. That's how it's rotated year after year. The point what I have discussed here is nothing but theoretical system. This is called theoretical system. Okay. Theoretical system. And we have the practical system where there is another route. In another route, we go with the subsidiary book and journal proper. Okay, journal proper, not journal entry. This is called journal proper. This is the another route. Directly we prepare the ledger from this route. So we either go from this route, journal, ledger, trial balance, final accounts, or the other route being subsidiary books and journal proper to ledger. One of the two methods are followed. Practically we follow only this method. So you need to parallelly understand both the methods. This is the traditional method. This is the modern approach, like practically we follow. Once you understand this method, of course, the base fundamental logic of accountancy will be over. For the small scale industry or small business, this level of knowledge is more than enough. So you try to finish up this accounting cycle and applying into a small firm so that you will understand how do I use the accounting knowledge for calculating the profit and loss and all. Is that okay? This is what about the accounting cycle. Okay.